Okay, welcome back everybody. Let's get right into the stock market technical analysis. Just going to show kind of how we wrapped up this week, and then we'll wrap up. If you guys are finding value in the private member group, let everybody know. And if you're interested in that, check out the link in the description below. Drop me a thumbs up, and let's get into it. I do want to start off with some of the posts that I did post in the private member group, just to kind of show you guys. You know, these public videos that I put out, I can't put out a video, constantly telling you about the zigs and the zags. I have to kind of give just broad analysis, give you kind of the macro trends, and you stick to the higher time frames where I think things are going. And then as things change, I can't always put out a video on the changes. So I try to kind of put them out once a week, twice a week, but in general, the private member group is really where that's for. So I'm going to dive right in. This is a post that I said, you can see here, it's from 4 days ago on this post. I posted this to the private member group, basically saying Triple Qs looks to be staging a rally after a false breakdown this morning. The hourly chart shows bullish divergence, and I'd expect about a 4% rally up to about 522.50-ish. That's really what I told those people. Everyone in the private member group, again, 4 days ago, and I get a lot of comments from people saying, oh, I faded you and I made money and this and that. Well, if you faded me this week, then you were short because I was long. And that, 4 days ago, you can see, here's our false breakdown that we had on this hourly chart, and there's the recovery, and there's where I made the post saying, okay, it looks like we're probably going to get about a 4% rally. And I told everyone, again, 4 days ago, and then there's your rally up to that resistance is, that was kind of the level I was looking at. That's about a 3.75% rally. And at the high, you can see at the very high, we're about 4% right there. All right, 4% to the actual high. So, that's kind of what I was expecting, and that's kind of what played out. You can see as I scroll up to the next post that I made, again, 3 days ago, again, it was really just reiterating the same thing, that we're at support with bullish divergence. We're just testing it again, and I still think we're going up to 522-ish. And obviously, if the level broke, then we would head down. I kind of gave the downside targets, but, I was still expecting that to rally. So, again, just kind of reiterating that. That's 3 days ago. Again, here's 2 days ago. I'm posting multiple posts, but at least every day. And this was talking about the 10-year yields and basically how they were still dropping. And I still see a rally in stocks that lasts for a few days. So again, and then here's the post that I made 1 day ago. You can see right up here. This is just the time that basically, this is not hindsight analysis. This was, posted well in advance of the move, but only to the private member group. So the comments that I get in the public group that are saying, oh, Maven's always wrong, they just kind of they just want to hold me to a complete narrative and say he's always short. And anytime the market goes up, we're going to come in and make some smug comment. And it's just based off of nothing, just the fact that they're trolls, But here's 1 day ago, and really, I show the arrows. QQQ hourly looks like it's going to sell down to gap entry around 511.75-ish, then probably a bounce since I still see the 10-year yield selling off. So there's the arrows that I pointed out on that move. And let me flip over to my chart, and basically you can see I thought we were going to sell down. Now, I was looking right about there. We didn't quite get there. That's okay. You never, oftentimes buyers and sellers will step in a little early. But again, I anticipated they were going to come down and then a rally up to that resistance line. Let me go back just to show you. See the arrows down and then up. So ultimately, if you were in the private member group, down at the lows earlier this week, I expected we were going to rally. I even gave you an opportunity to take a short trade down to this kind of intermediate level and then a bounce up to the trend line. So multiple trades really take place. I can't post this stuff in a public video. It's just by the time it gets out and you consume it, it's out of date. So that's what's going on in the private member group. I don't get everything right, of course. So, I put a lot of trade ideas out there and give you guys objective levels. But again, just to come on the public channel and make dumb comments that make no sense and are backed up by zero facts, because you look at the comments people make and there's literally like no facts for the most part. They'll just say, oh, he was wrong this one time. And, okay, that's fine. I never claim to be that I'm going to be 100% right, guys. I never say I'm going to get everything right. So to call out the times that I'm wrong, but give me zero credit for the times that are right, that's just haters being haters. All right, back to the charts, triple Qs, just to give you guys kind of where we wrapped up on the week. I went home flat. I don't have a position in triple Qs right now. I don't have a good read on where we're going to go, and it's a long weekend. It just didn't make sense to go into the long weekend. You got the inauguration coming up, and we're kind of at resistance. We're slightly above it from what I can tell. You can see that we're just barely above it, but it's so close that it's not a definitive breakout. So I can't say that, that's not a breakout. And price action today was super weak. It was just we were just like going sideways, just chopping around. So best to go home flat and reassess next week. To the upside, let me go to the daily and I'll show you where I think the upside will end. Here's the bearish rising wedge on the daily chart. Again, negative divergence, so it tells me we're going lower over time. All right. Now, I guess I have to be like 100% clear to people, otherwise they come out with ignorant comments. But basically, I do think we are going down to the 200-day. It doesn't mean because I think we're going down there that on Monday or Tuesday, I guess, we're going to just gap down and price is going to go straight down without any bounces. And if that doesn't happen, I'm a perma bear and I'm completely wrong and fade me or whatever. That's not what I mean. What I mean is I do believe, because stocks don't typically fall like that. The big crashes usually come at the end of moves, not at the beginning. It is a downtrend, but I think if we're going to go lower, it's gonna, we're gonna have some support. You're gonna come down to support. They're gonna battle it out, and then maybe a little bounce, and then you work your way lower, and then before you know it, you're down there. So that's how that works. I don't have a good read that that's gonna take place on Tuesday, so that's why I went home flat. What we could do, all right, is we could rally up to back test this trend line here on this wedge. All right, we could rally up and do a back test. And if we do that, we're going to make a new all-time high on the daily chart. It's going to be a divergent high, and it's going to be a very objective short if we get up there. Okay, so I will definitely be looking to short up there. Again, you want to short highs and you want to buy lows, right? You don't want to buy highs. I don't want to short low when everything's crashing. That's not the time to short. I want to short when we're rallying into resistance, when nobody wants to short and everybody's screaming at the mouth bullish, and all the trolls will be like, "Oh, we're new all-time highs," and yeah, that's usually the time you want to short. Just like right here, right? If you go back and look at my video on December 16th, I said I really thought this was a stop raid. The price action looked like a stop rate, and I didn't think we were going much higher than there. And it really looked, because this bearish rising wedge was in play, and we were just above it, and it looked like a stop rate, and we're about to go down. All right, if you go back and read through some of those comments, and it's kind of funny because the next day or 2 days later, we basically were down quite a bit. We were down, it was down 5% in the following few days. So again, I want to short when nobody wants to short, and I want to short at resistance, or key areas that look like, the most objective areas. Up here, if we get a back test, if we run up here and back test, that's objective. So that could happen, all right? I can't say that's not going to happen. I'm kind of leaning that way right now, and it's mostly because of the bond yields. The yields are, they look like they can drop a little more, and if that happens, I could see stocks rallying. So that's the way I'm kind of leaning. Now, here's the other thing. This is a daily chart. So I think if we do that on the daily and back test, I think it will be followed a back test will be followed by, in the next day or two, by selling and probably impulsive selling. And if I go to the weekly chart, and I got to kind of clean this up as I go, but on the weekly chart, we have a bearish engulfing candle. Let me kind of clean this up. Your bearish engulfing's right here, all right? That's your bearish engulfing. So that is a topping stick. And so you really don't want to see a weekly close above about 532-ish, kind of that level. A weekly close above that would negate that as a topping candlestick. But what I think would happen is, if we're going to rally and backtest, it'll be just on the daily chart. But by the end of the week, because remember, weekly candles don't close till the end of the week. By the end of the week, we'd be basically back around 532, if not substantially lower. All right, and that would keep that bearish engulfing topping stick intact. So that's the way I'm leaning. Whether that plays out or not, I don't know. We'll see next week, and we'll kind of see how the charts start stacking up. The big thing, though, is this TNX, this 10-year. If I go to this on the daily chart, kind of roll out, you can see we've got some support here on the interest rates. This is just showing the interest rates, the TNX. We got some support, and I could see us coming, I could see us coming back down to that support line. All right, you take out the highs in interest rates, stocks should fall. Otherwise, if you remain in this area and maybe bounce and continue to kind of grind along the support line, you could see that rally in stocks and that back test. All right, so that is my outlook as of right now. We'll see where we go next week. Give you guys a couple trade ideas. BlackRock looks like a short still. It could backtest some more, but on the daily chart, you've got support. Broken impulsive selling there. That looks like pretty good impulsive selling. Again, this was preceded with negative divergence. So it tells you, okay, divergence is coming. Look for a break of trend. There's your break of trend. That's a sell signal. All right. And then it rallied up and did a perfect back test. Was rejected the next day. And, today was an inside day, so it's kind of a continuation pattern. So as far as I can tell, we have a breakdown, a back test, and we should work our way lower. There's also this potential downtrend line to watch now. So maybe one more rally on Tuesday into kind of this resistance area, and then, it doesn't have to do that. It could just start selling off. But, if Triple Qs is going to rally a little bit more, then I think this might just kind of hold up. Maybe you see another rally, right into resistance again. And then, on the downside, support levels, we've got one here at 964. We've got the 200 simple moving average, and we have pretty good support down here at 829. Yeah, those are my levels to the downside for right now. The XLF is, here, BlackRock's more of it's almost like a real estate play because of all the real estate they've got. It's very interest rate sensitive. So the main thing is the bond rate. So we got to look at that TLT. You can see here, we were in a downtrend here, and rising TLT means falling interest rates. So there's your downtrend line, broke to the upside, and today kind of made a higher close. So still looks bullish. I think TLT can still rally up to some higher levels, and that means interest rates will be dropping a little bit, which would be bullish for real estate, bullish for gold, and BlackRock should hold up a little bit. Eli Lilly, haven't talked about this constantly, but again, my target is I've still got this level right down. I've got it circled. It's about 616. This was your uptrend line in Eli Lilly. We put in negative divergence and we broke, back tested. It did a little recovery, but ultimately it failed, and it's been working its way lower. So there is a clear and distinct downtrend. And again, this is what I talk about. When I think something's heading down here, doesn't mean it's going to go straight down. I would talk about Eli Lilly heading down here, way back here when it broke trend. All right, doesn't mean you hit support, and usually you're going to get bounces after you hit support. So you fall, to support, bounce and back test, and hit support, bounce, bounce. You know, there's support, it bounce. All right, and we're at support now. I think it's probably going to break now. We've already kind of hit the support level, and it should break. And well, I don't know. There might be one more bounce. We'll see. This is kind of a thin zone, so I'll be watching this. You can see here you've got kind of a support shelf. It's about 728-ish, somewhere right in there, pretty much right where we're at. You can see the after hours at 728. If you break that, you should just drop straight down to about 616, because this was just a straight rocket ship through those levels. So when you break back down, it should just drop right down to it. We haven't broke yet, so maybe there's one more rally. And if they do, there's this downtrend to watch. You know, I could see us rallying all the way to the trend line and the 200-day, and they get rejected there, then break and head straight down. So yeah, you can't short it quite yet. I mean, if you were shorting it, we closed pretty much at support. So you'd want to cover your short at support, and then we'll see how things open up on Tuesday. But it is working its way lower, and I do believe we will, start to reach these lower targets over time. And I'll wrap up with Nvidia, because this is the mania of the market. Pretty much everybody, at least all the retail people own it. Everybody's been pushing Nvidia, and rightfully so. I mean, it's obviously had massive returns. If you bought it at cheaper prices, you've done really well. But it to me looks like that's over. Looks like we're heading down, at least for a correction. But look, on the daily chart, you've got support. You've got several kind of reactions. There's more. There's this is the break. We broke trend a couple a month or so ago, and you hit support, back tested. There's a full back. See that full back test right there? And it was followed the very next day by big impulsive selling. Okay, it's sell the rip now. So if you rally into resistance, it should get sold, and we should work our way lower. This to me, this looks like it's topping. All right, it's had negative divergence. It's been building for quite a while, and we should head lower. So once you take out this support right here, you should go right to the 200. They'll fight. The bulls will fight at the 200. So you should, doesn't mean you will, because there's a lot of hot air in this stock. I mean, there's a lot of people that have been buying. Most people buy things at most people buy the things at the end, right? The early adopters, which is the fewest amount of people, get it early, and then the crowd piles in usually at the end of moves. So you've got a big amount of people that have piled in. So if you drop, you could slice right through the 200. I would expect at least a bounce, but it could go something like slice right through and then recover, and you get the bounce. Okay, and then that'll be resistance, and it will again, I think it will continue to work its way lower. Once it definitively takes out the 200 and isn't able to recover it, we should start to really move lower and head down to lower levels, $75, and then probably 39.60 would be that looks like a good target to me for a good drop. That would be a drop from where we're at now of about 71%, which is about consistent with Nvidia. You look at the last time it dropped, here's in 21 to 22, it fell from the high to the low, 67% on that drop. Here's another drop. This is just ahead of COVID, basically, and it fell 56%. That's what Nvidia does. When it drops like 50 to 70%. So, yeah, that'd be my target for right now, kind of the final target on the move. Maybe a gap fill. There's a big gap to fill, but we'll see. So, yeah, it looks like it's topping. And, again, that uptrend's broken. Does not mean we can't pop, up and make new highs, because topping patterns, you can run up and pop up, make new highs, keep sucking more bulls, dump, pop up, make new highs, suck in more bulls. You look at it, that's what it's been doing. That's what it's been doing for a while here. Look, there's a new high, sold off. There's a new high, sold off. Here's a new high, sold off. All right, so it can do it again, can make a new high. It's probably going to get sold into, and then eventually it doesn't make a new high. All right, and it starts to go lower. So if you're an investor in this, to me it looks like it's time to get out. But yeah, you do what you want. Okay, I'm going to wrap up there, and haters going to hate. Catch you on the next one.